is Alizabeth Leng-Barton of Certified Credit's Talk Data to Me podcast. And today I'm joined by Susan Shaffer of National MI. How are you?
Good, Allie. How are you?
Good. Thank you so much for joining us. We're very excited to have you here live at MBA.
Thank you.
And we're going to be talking about private mortgage insurance. And I'm going to be honest, I do not know much other than when my husband and I bought our first house, we needed to get PMI.
Yes.
So let's just start with what is PMI and when does it apply to a loan?
Well, PMI is private mortgage insurance, as you said, and it applies to only conventional loans when a borrower doesn't put 20% down.
Okay.
So usually nobody actually wants PMI.
Right.
But,
Right.
but we are an important process of the whole mortgage lending piece and home ownership.
Yeah. So like the example I was talking to you about, we were 23 when we bought our house. We didn't have 20% down. So we did 5% and then we had PMI until we refinanced and so on and so forth. But it's very important when you consider you have young home buyers. You have home buyers that might not be in a financial position to put 20% down. So is there a benefit to doing a conventional loan with PMI over doing a possible, government program or a government-backed loan?
I would say there are definitely benefits. There's benefits of both.
Okay.
But since I'm your PMI girl here today, we'll just talk about the benefits of those. And I would say that the main benefit is that there is different pricing levels that are available. So we're not a one size fits all.
Okay.
Which typically the fees around government programs are a one size fits all. So they don't take into account different credit criteria.
Okay.
Where we do. And then the PMI on conventional loans eventually falls off your loan automatically when your LTV reaches 78%.
Okay.
And it does not on government loans.
Okay, so if I had an FHA loan, it's not falling off.
It will not fall off automatically.
So that impacts your loan for the life of the loan then?
Yes.
Or until you refinance or anything?
Correct.
Okay, interesting.
Which ultimately could end up costing you more money.
Wow. I mean, that's something to consider, especially if you do have that opportunity for, a 3 or a 5% down. But is there ever an opportunity where there's 0% down and you have the PMI?
Not on conventional loans. 0% down doesn't exist in our world today. But who knows? Maybe someday.
So there's that myth then that we're talking about, that you have to put 20% down on a house. Does PMI then make that false?
I would say PMI makes that false. And I would say that myth has been around for a long time.
Right.
Probably generationally, it's been passed down from parents to children. Because when you buy a house, typically you ask your parents for advice. And a lot of the previous generations say you have to have 20% down. And PMI has been available for a long time. But that myth still exists today.
Okay.
And you can have as little as 3% down and get a conventional loan with private mortgage insurance. Right. And I would say for first-time home buyers, that's important. Save your money for other things like new furniture, appliances.
Fixing up a home. I know we bought a fixer-upper. We started, I don't know, in July. We didn't get to move in until November. But having that availability to only do, we looked at 3%, we looked at 5%. The cost outweighed doing the 5%, but we were able to still then spend some money on fixing up our home.
Right.
Which was so valuable.
Sure. And you want to save some just in case something breaks that you need to fix.
Our furnace broke the next year.
Your furnace, a hot water tank, a leaky roof. Right.
So many things can go wrong in homeownership, and we all know that. But if you could give a few tips to lenders about quoting PMI, about the PMI process, what would they be?
Tips to lenders would be, especially around quoting MI, and I think it probably mainly applies to loan officers, is that you want to always give your borrower credit for the most income that you can to lower their debt to income ratio, because that's now a part of pricing out MI. It's no longer just a FICO score and a loan to value. And I would say quote and requote often, because rates change, they're dynamic.
Oh, I didn't know that.
They change. And if a rate improves, you can potentially lower the rate. So before the loan closes, make sure you're rerunning to make sure you're getting the best available rate for your borrower.
Oh, that's really good advice.
And
Thank you,
save your
Susan.
quotes. They're good for 90 days.
Oh, okay. Look
That's
at
my
that.
final tip, Allie.
I love it. Well, thank you so much, Susan, for joining us.
Well, thanks for having me.
This has
I love
been wonderful.
Next time we'll do, PMI 2.0 or something.
Ooh, I like it.
More to come. Let's give a teaser.
I love it. Well, thank you so much, Susan, and
Thank you.
stay tuned for PMI 2.0.
Yes. Coming to you soon.